Great with a live transition. So we are streaming to all manner of people on the conference site, and I'm so happy to have everyone here today.
Be here.
Happy to be here.
Great to be here.
So let me make sure everything is up and running, and we are off to the races, I believe. Got some dozens of people are rejoining, so I think we can go ahead and get this show on the road. All right, awesome. So, hey everyone at the conference, we are coming at you live for our noon session. My name's Nate. I'm a first year MBA at Wharton. I'm one of the conference co-chairs and incoming co-president for next year. And it's been a real joy to be able to build out this panel on the future of digital identity and to be able to work with our panelists. So we're joined by Gabrielle Haddad, the founder and COO of Sigma Ratings, Charles Dellingpole, founder and CEO of Comply Advantage, Carrie Kalaya, I hope, am I pronouncing your last name right?
Close enough.
Okay, CEO of Authentics, Neftali Harris, co-founder and CEO of Centilink, and Laura Speakerman, co-founder and CRO of Alloy. And today we'll be moderated by Adrian Murphy, who is McKinsey's resident financial crimes and compliance expert, who I've had the joy of working with and collaborating before. And with all that said, I'd love to leave it to the panel to take the next 55 minutes and show them what you've got. So with that, the floor is yours.
Terrific. Thank you very much, Nate, and good afternoon, everyone. I think the topic of authentication fraud is really pertinent, right? Obviously, we have been through COVID-19, hopefully coming out the back end of that, and seen elevated risks. We've also got the transition to more digital business models, real-time payments in the US. So really, that's raised a number of questions and challenge when we start to look at the topic of identification, fraud, and so forth. So very exciting times in the industry. And look, we're going to have a broad sort of base, hopefully free-flowing discussion here. First, we'll look at some of the sort of key trends that we're seeing in the industry. We'll then have a bit of a discussion on what are the implications for strategy, what are organizations actually doing, and what might the future look like, which is quite exciting. So maybe just to kick off the discussion, Carrie, I'll reach out to you, and maybe you can just talk to what are you seeing is some of the key trends in this space in the industry at your clients at the moment. That would be terrific if you could kick us off on that.
Sure, I'll be happy to. So it's great to be here and good to see some of the panelists again who I've met in the past. The world as we all know it has completely changed, and I found the last panel really interesting because they landed on this point of identity and verifying that somebody is who they say they are, and data being central to that. And so what we have seen over the last year, prior to the pandemic, it was clearly central in the FI space and a lot of other key verticals. But with COVID, we have seen this massive movement from sectors and from players who weren't thinking about what the risk of fraud may be in their ecosystems and what it means to be able to verify who somebody is, who they say they are, having to accelerate their own learning agenda. And on that note, I think the previous panel talked about some of the infrastructure things that we're evaluating, but I look at it from the macro to the micro view, which is, the regulation is starting to change around the world to become more scrutinizing around what we do around data privacy. Corporations are looking at not just verifying somebody as a one-time event, but it being continuous throughout the entire customer journey. And you're seeing this new movement of individuals really trying to understand this notion of identity literacy that must be fostered between businesses and consumers to really protect themselves, but to fight fraud together. And this has only been underserved with the 300% increase in fraudulent activity over the last year, and the fact that 1 in every 10 adults have been a victim of identity fraud, and many of them don't even know.
Wow, those are certainly some staggering statistics. That's super interesting. One of the things before we move on, Kerry, you mentioned this concept of identity literacy. That sounds interesting. Could you say maybe a few more words on that just for our audience?
Sure. I mean, I come from the financial sector, as I think many of you in the crowd, as well as on the panel. And for the last couple of decades, we've always been struggling with this problem of financial literacy. And how do we ensure that we're teaching the next generation and even the older generation about the importance of what saving a little bit here or there and the choices they make, whether it's on a mortgage or a loan or saving money or getting a job means, and how that can affect kind of the long-term trajectory of your life. And this notion of identity literacy, which is people understanding how their information is used whenever they're making a transaction. And we can debate, I think, around what is identity. Someone may see it's what you see on the screen. I'm Carrie Colge right now, but it's so much more. It's around actions, it's around intentions, it's around behavior, and it's around context, and it's, to me, around access. And so how do we educate the global population as businesses, as providers, and as individuals, how to make people more aware of the choices that they're making as they come online and the implications of their life in the offline realm?
Terrific. That's really interesting. So we get this much sort of broader notion of identity and potential ramifications. There had been a tendency really to think of this, I guess, almost from a quite transactional basis in terms of loss prevention, mitigation. And maybe, Charlie, you can come in here. As we've seen these sort of trends, this disruption, change, shift to sort of digital business models, how are organizations thinking about that in terms of their objectives that they're aiming for in this space?
I guess the past year has been exciting for the fintech world because you've seen some massive fundraisers and also some huge growth. So I'm sure everyone else on the panel has seen the same kind of trends in terms of what were relatively small companies suddenly become huge. I guess companies like Robinhood have notoriously onboarded thousands and thousands of new clients. There's been huge shifts elsewhere with kind of digital-only banks becoming very, very large. And I guess therefore, all the panelists you see today have in their own way helped different parts of that system. Speaking from my vantage point, what we do is help, once you determine if that person is who they say they are, then are they bad, right? So are they a terrorist? Are they part of a Mexican drug cartel? And that's actually quite a hard thing to do. And so what we do is we collect information from all over the web, from government sanctioned sources, and then build profiles of people and companies with facts, and then tell you, is that person the Mexican cartel person, or is that person a terrorist? And so I think all these things are super challenging, and that's why you need to assemble the kind of best of breed solutions from each of the panelists here to have a full stack solution.
Fantastic. And, I think you touched base there on some of the risks that we're seeing, right, in terms of sort of money laundering, drug cartels, sanctions. Have you seen any evolution in terms of those risks that organizations are worried about, Charlie, for example, into the sort of reputational risk space, the environmental risk space? Is that something that we observe a lot in the media, but have you seen that really land with some of your clients as well as an issue?
Yeah, I think part of the fun of working in the space is it's completely global and it's ever changing. So I guess on Monday, I'm talking about the evolution of Burmese sanctions with the army junta takeover there. You've got Hong Kong, you've got the Carrie Lam and the government being forced to use cash. In the US, you've got the kind of weaponization of sanctions, and to some extent the blunting of those sanctions as kind of American foreign policy relies more and more on the projection of economic power. I guess specifically you've had, I guess with the Capitol protests, you had riots outside the Capitol, some of which were funded by Bitcoin. So Yeah, I think it's a great question because it's just the kind of constantly changing spectrum of human behavior and less and less tolerance of evil, whether that's environmental crimes, human trafficking, fraud. I think it's kind of every day there's some sort of new face of evil that is presented to us.
Terrific. So we're always presented with ever evolving and ever threatening risks. It's quite a scary world there, Charlie, that we paint. Just want to pick up on a couple of other themes. I think Kerry had mentioned, the role of regulation. And, if anything, we see different speeds across the globe. And, if anything, people would argue that with things like, PSD2 and such, like, the European Union has been more sort of forward thinking. I don't know if, Gabrielle, you want to talk to that one. How do you see the sort of impact of some of these different trends, particularly around regulation moving in the US versus the European Union, for example?
I think that regulation is just getting tighter and getting stronger around these risks. We're seeing actually an increase in regulation globally. And I think that Europe has actually been leading the charge on a lot of this in terms of how they've implemented it and how strict they've been. And now we're starting to see a lot of new regulatory movements coming up in the US. And where that becomes a challenge for institutions, particularly as we are moving towards a much more digital world, wanting there to be a faster, more digital payments to be the focus, is that there is a little bit of a disconnect in terms of what the regulatory expectations are around what needs to be done to manage these risks and the technical feasibility. Charlie mentioned, some of that figuring out who people are, if they're connected to certain types of risks it's very difficult to do. He's absolutely right. And in one of the things that I think about a lot is also what is the role of corporate identity. And that's another area that I think is a huge trend that we're seeing in terms of this movement from what was previously, when we talked about identity, we always talked about individuals. Now it's how can we be thinking about corporates as well? And we're starting to see regulations like the Corporate Transparency Act that are coming up in the US. But the truth is that the technology is very difficult to develop, to make links between people and companies and to identify these risks. So there's a bit of a disconnect between what regulators want for institutions to be doing to manage these risks and the advancement of the technology, although we're getting a lot better with technological advancements and our capabilities around that. But there is still the adoption by institutions, the willingness to do that, and also the regulators' willingness to accept technology solutions versus the large compliance teams that we see today.
Terrific. So there's this sort of notion that, yes, regulation can be a driver, obviously ahead of the curve in Europe. It sounds like it's a big issue in the US, and also really interestingly that actually the regulators may find it tough to stay up to pace, just given the speed of change. Gabrielle, you mentioned something there around corporate identity. That sounds interesting. Maybe just for the benefit of our audience, do you want to say a few words about what that is and how we should sort of think about that and why that's important?
Sure. I mean, when we've talked in recent years about digital identity, and looked at technological advancements there. We think about cool things that you can do with biometrics and ways to bring in all of these advanced ways of identifying an individual. But with the rise in B2B payments, I would say over the last year, a lot of the COVID fraud that occurred within corporates, there is a movement towards the idea of there being a corporate digital identity. And is it possible to have all of the information that you need to understand one of your corporate counterparties in a single unified view? And can you keep all of that information up to date on an ongoing basis? And I think that we're still in the early days of seeing that movement. But I think that that's the next generation of identity, and where we're really going to see things moving over the coming years.
Adrian,
Terrific.
may I add something too? Because I think what
Please.
Gabrielle said is just, it's fascinating, and very much like her, this whole notion of what happened during relief fraud, I'll call it, where you saw small businesses that were applying for small business loans and were getting millions and millions of dollars that they end up finding out were spent on luxury goods versus helping the businesses survive. And I think this idea of corporate identity has never been more important. I will add to that, though, that we were talking to a prospect a couple of weeks ago, and they asked about the identity of employees going beyond just the traditional background checks or AML or things that Charlie's company does, but really looking at their behavior. And the reason why is they want to make sure they're hiring employees that have the same value system as the company does, which I found to just be kind of another kind of eye-opening experience of where people are taking to data, and to the point about regulation, what's okay and what's not.
That is fascinating, Kerry. So it's an evolution in, the types of risk, right, and value based. I mean, that's really interesting. Have you also seen a trend in terms of reputational risks and environmental risks and so on becoming more prominent as well?
Do I? Yeah, absolutely. Yeah. I do. Sorry, I didn't want to take more time from the panelist. Absolutely. And I think there's this idea of you verify who somebody is, and you can verify if they're on a watch list, but how do you verify that they're going to behave well? And particularly in the sharing economy right now, I mean, one of the things that I think we all saw that Uber and Lyft did is starting to share information about drivers that had bad behavior or fraudulent behavior. And I think it's just the first step in how do you unify as a community and as a society to start keeping all of us more safe.
Terrific. And, I think it never ceases to amaze me, just the ingenuity of the criminals, right? I think one of my favorite fraud rings, well, I shouldn't say favorite, but it's called the Scattered Canary, right? It's a Nigerian outfit. And when you actually look into them, they're really functioning almost like a modern fintech, right? Taking propositions to market and sort of optimizing those. So we are faced with a barrage of threats. So maybe Laura, if I could sort of pull you in a little bit, we've heard a lot here about the bad stuff, the threats that we need to be aware of. One of the things that I had certainly seen at my clients was, people starting to actually want to, as it were, flip this equation, right? So can we start to think about, identity and fraud maybe as a force for good and to enable businesses sort of across sectors? Is that something that you would have a view on, Laura?
Yeah, I mean, I think we end up talking to a lot of our clients and partners about using compliance and regulation and fraud and all these sort of like big scary things, and these sort of things are thought of as huge burdens, which they often are, to your competitive advantage. So if you can sort of flip the script and say, look, we're gonna have to better identify these people. You meet the compliance requirements, you're going to fight fraud, but you're also going to know a whole lot more about your customers. I think to Carrie's point earlier, this should be a continuous motion. It's not a one-time thing. So you have someone who's onboarding, you check them, they're good, they're bad, whatever. To her point, some people may look perfectly benign and then they turn out to be bad actors. And so this kind of continuous checking lets you prohibit sort of future bad behavior that you maybe couldn't have found at onboarding, and gives you the chance to actually better know your customers over time. So better cross-sell and upsell opportunities, I think, is a really, core example of that. Is like, if you know more about what they're doing and their transaction behavior, you actually have the chance to better serve them in the future. It's not one size fits all. You have to really sort of, there's a lot of legacy systems and very siloed systems. So it's not like I'm saying this is easy and you just flip the switch and like, why isn't everyone doing this? It's so obvious. There's a lot of complicated tech stacks out there and a lot of old technologies, but it certainly is, I think, well worth the payoff, especially when you look at sort of what customer acquisition costs look like, what fraud's looking like, what AML fines are looking like. It's, I'm obviously biased. I just couldn't, I can't resist it, but it's completely, worth the ROI from a user experience perspective.
Terrific. So really consumers have become much more used to sort of streamlined experience, particularly with big tech and such like. If you had to look across industries, who would you say is sort of further ahead, who is sort of behind the curve, needs to sort of catch up? Is there an industry perspective to this that you have?
You know, it's interesting. I think there's been, like, as fintech has become more cultural, right? And I sort of, that's, I think a new trend we're seeing this year of, like, you know, Cash App is sort of this like new kind of cultural phenomenon, and there's swag, and there are kind of teen influencers who are signing up, you know, kids for bank accounts and stuff. So as it becomes more cultural, and I think as you, and in crypto, it's kind of similarly say that that's another trend that leads to the same kind of place, which is, if it's more embedded, if it's everywhere, if it's cultural, I think we're going to see the barriers or sort of, the barriers lower, and we're going to see sort of the need for better tools, whether they're kind of blocking bad behavior or enabling really good customer experience, or ideally both, along those applications where onboarding should be really easy, the user experience should be really good. Those are going to be the companies, the institutions that are going to be far ahead. It's not going to be, unsurprisingly, the banks that refuse to do digital account opening. And there are those banks, and to me, it's always sort of mind-blowing that there are banks that decide that their strategy is just to stay brick and mortar forever and not be able to open accounts online. But that is a strategy that exists. I think they're gonna
There's fewer though,
suffer
Laura,
the most.
right?
There are fewer. Absolutely.
There's much fewer now.
Yes,
Terrific.
there are.
Naftali, I saw you were itching to pitch in, so I'll give you the floor. Actually, what were your sort of views and some of the trends and themes we've been discussing so far?
Yeah, for sure. Well, I would say the number one trend that we've seen, I think is kind of behind a lot of the increase in fraud that I believe you mentioned, Carrie, is actually the rise of people stealing money from the U.S. government with CARES Act funds. I think you had alluded to the PPP. People actually testified before the House Financial Services Committee about this very thing. People that are fraudsters that are misusing funds that the government had laid out for the PPP. Also, unemployment insurance has just been absolutely massive in terms of getting hammered. We've seen so much fraud, which is essentially just fraudsters that are stealing money from different states. Washington State had, I think, over $1 billion stolen from them. California, where I am, and not only I reside here, I also pay taxes here. We had, I think, $10 billion plus. It was like an absolutely insane, just mind-boggling number. And essentially what's happening is, you know, you think, oh, this is government money, but it obviously has to get into the financial services system. And so fraudsters are stealing this money from the states. They're claiming to be victims. I think even Dianne Feinstein, who's our sitting senator here, might have been victimized for unemployment insurance. And fraudsters are claiming to be their victims. They're stealing money from the states. But then the financial services ecosystem has to get exploited by the fraudsters as well, because they take the money that they steal from state unemployment insurance and have to move it into the financial services system. And so we've seen a number of our partners attempt to get victimized by these fraudsters, where they've stolen the money. They're trying to open up accounts, whether those are DDAs, so checking and savings, or others. And it's just been absolutely. I've literally never seen anything like this before in my career. You know, typically a fraud rate that I would call high would be like 1%. That would be kind of obscenely high. You know, attempts maybe a couple percent, but that's like, wow, you have a lot of attempted fraud. No joke, I've literally seen 90% attempted fraud rates at scale. So I'm talking like some of the largest financial institutions in the United States, where literally 90% of attempts to open up new accounts are fraudulent. I've never seen anything like that in my career. I don't think I'll ever see that again. But it just goes to what an absolute sea change we've seen in the last year with COVID, the various different stimulus money, and fraudsters attempting to exploit it. The other thing I wanted to, so we'll talk about that, I'm sure, later in this panel. And I think there's a lot we can talk about with the CARES Act. The other thing I wanted to talk about a little bit is just one of the interesting points that I think Laura made around some of the benefits you can get from better identity proofing and better knowing who your customers are. As Laura talked about, being able to sell better because you know better who somebody is. I think one of the other interesting things you can do with this actually is enable better customer experiences. When I think about my business, Centrelink, is we build better technology to figure out who people are. And one of the things I always think about is okay, so you have better technology. Better technology equates to more value, but it's a question for business leaders to decide, how do you want to spend that value? How do you want to use that? And sort of the most obvious thing you can do when you have better decisioning technology, so the better ability to figure out people are who they say they are, is reduce losses. Like you can just save more money, and you can choose to decline more people who have the same bad rate and save money that way. But of course, you can also increase approvals with the same economics. You can also, interestingly, actually reduce the friction that you have, where if previously you were asking for a driver's license from everybody, you can say, oh, I don't want to do that for everybody, I just want to do that for a subset. And there's just so much you can actually do with better technology, which all of us here are in the business of making, and you can spend that technology in a couple of different ways. I could talk a lot more, I'm not going to right now, but happy to be.
Terrific. Sorry, fire away, Gabrielle.
One thing I would just add on the customer experience is just to bring it back to corporates again. We do a lot in the corporate space, and I feel that we're seeing the same things and the same capabilities. If you can very quickly know that one of your corporate customers has raised a new financing round, if you're talking about an early stage company, or they have expanded into a new jurisdiction, or they've released a new product, then you can better target your products and services to them. And frankly, this isn't something that is being done really anywhere today. And the capabilities that are there using technology, using the ability to look through unstructured data like news and identify when these types of things have happened, and to notify an institution that these changes have been made, can really help them to better tailor products and to just provide an overall better customer experience. I think that there remains a disconnect in terms of what the current workflows look like and which technologies people are deploying, but that's absolutely something that can apply both to individual customers as well as corporate customers.
Yeah.
No. What people forget, honestly, is that corporations are made up. Famously, corporations are people too, right? But in all seriousness, they're made up of people. They have owners who themselves are consumers, and that's an important part of that identity.
Fantastic. So yeah, a couple of really interesting things there. I mean, I think the sort of policy situation we find ourselves in is sort of extraordinary, right? And I think there's another couple of $1 trillion small change coming down the pipe, close to about 10% of US GDP. So I think just the scale and speed with which these funds have been disseminated is extraordinary, and that has had sort of big implications, and definitely. It's really interesting. I've now seen people start to talk about experience much more as the primary objective. Before we move on from the trends, the big obvious one is crypto, right? And that's obviously moving mainstream. Valuations are volatile, but in general, sort of sky high. I unfortunately was not an early investor, but does someone want to sort of talk about how we should sort of think about crypto, the sort of opportunities that might offer, the threats that we're actually seeing through that as a sort of value transfer mechanism? Just to cover off on the trends, who would like to take crypto, or I can pick someone from the panel?
Adrian, I'll take it. I won't talk about the value aspect of it. I'll allow somebody on the panelists to do, but to link the trends with where we are at this pivotal point to support the unexpected volatility in a sector, in a market, or with fraudsters, I think has never been more acute. I mean, crypto is a great example of where the experience, the time to market, the decisioning of someone who is who they say they are, and the transfer of money in and out of systems has never been more important. We happen to serve a lot of crypto markets. It became very real for us, the importance of using AI and machine-based learning in order to make these decisionings real time. Because any of you who maybe were an early investor in crypto, if you look at Kraken's versus Binance versus Coinbase versus others' experiences, they're all very different. And in a moment when you want to sell a fraction of that Bitcoin and you can't verify you are who you say they are, and it drops by $10,000, it's pretty problematic. So I think that that's been a really interesting case study for all of us, where the frictionless experience matters, the integrity of the people who are exchange matters. You're seeing tremendous synthetic fraud. And I think Nathaniel, that's what you focus on a little bit, of where you can't even detect with a human eye that it's a fake ID. Like, you actually have to use artificial intelligence to do that. And where you see the speed of having to scale, just, never like we've seen before. And so it presents a ton of opportunities for us, but it does introduce a lot more risk. I mean, synthetic fraud in those spaces that are untraceable has never been more prevalent.
Yeah, oh, fantastic. So fantastic. Look, I think we've really sort of highlighted a lot of very interesting trends there. I just wanted to maybe change gears slightly and start to think about, some of the solutions and what organizations are doing to either, comply with these regulations, combat these risks, or, enable this sort of terrific client experience. Now, I guess, the topic of machine learning and AI is often touted in this space. I'd love to just hear a view, and maybe Charlie, you can talk to this. What are we really seeing that's real in terms of AI and machine learning that's being implemented to help deal with some of these risks and some of these problems? Could you just talk to that maybe?
Yeah, so I guess any sufficiently advanced technology is indistinguishable from magic, right? And I guess lots of these things are kind of quite basic things, but specifically there are like 3 broad techniques which have been applied in different areas, right? So there's computer vision, which I'm sure Kerry can tell you lots of detailed facts about in terms of facial recognition, comparing that to passports, right? There's natural language processing. So we will look at some text and we'll say, Tom Brady terrorized the defense is different to Tom Brady led a terrorist attack, right? So that's natural language processing. And then it's kind of like logistic regression, classification, and looking at kind of patterns and trends and training data feature extraction. So looking at 10 million payments and saying every single fraudulent payment is from this particular postal code in North Arizona, because they're all fraudsters in that particular area, right? So specifically, the 3 machine learning techniques that are most prevalent are those.
Excellent. And you touched on data there, which I think is an interesting space. Maybe Kerry, do you want to talk a little bit to the different types of data that we're now seeing be used? Maybe some of the more innovative examples, if that's around sort of picture, video, voice. What types of things are we seeing at the leading edge?
The different types of what, Adrian? Sorry, I didn't follow that.
Data.
Oh yeah. Gosh, I mean, it's endless right now. I mean, Charlie's kind of laughing because it's kind of, where do you start? Look, the finger biometrics was accelerated with the iPhone's initial release a number of years ago. And quickly, we have moved to a world where facial recognition is absolutely core. And the question now becomes, how do you do that in an unbiased way using computer vision, which is Charlie spoke to. We're seeing a trend in voice biometrics, but what I'll say to you, there's a layering effect that's starting to happen, that it's not just about one type of verification. It's just not about one data set. It has to do with the layering of multiple. And the layering of multiple is an effect of how risky is a transaction, or how much do you think this person may not be who they say they are. So that convergence, which is what I think ends up being fascinating, and doing it at a time or a moment in a customer journey or transaction where it's almost like credit card processing. Sometimes you don't get asked, to do an OTP. I think we're moving in the same space when it comes to identity. So the data sets are endless. And I do think with biometrics becoming more and more at the forefront of how people identify themselves, it gets back to how are we going to regulate it in a safe and secure way where people aren't exposed, because those are identifiers that you can't change.
And how do you also think about this from a sort of privacy perspective, right? We all are aware of the sort of multiple, data breaches. They almost seem to be so regular now, you become somewhat immune to it, right? If we're going to start going down the sort of biometric route with fingerprints and such like, how do we think about that in terms of data protection and privacy? Does someone else want to talk to that one?
I have a different perspective on the breaches actually, which is I think no one ever says this publicly, but I'll go ahead and do it. I don't actually think that data breaches today cause increased fraud attacks. And for the simple reason that fraudsters are not gated on how much data they have. Like everyone's data has been breached so many times. With the Equifax breach, it was literally, I think 80% of Americans, something like that, were in that. And these breaches have happened so often that I don't think that increased breaches actually cause new fraud. Actually, I think the reason that there's not more fraud is frankly that companies have fraud controls that prevent it from scaling as much. Thanks, frankly, to a lot of the people on this panel. And so, it's sort of interesting. I think there's a lot more attention that's paid to breaches than is sort of merited by the effects of it. Now, obviously, no one should have a data breach. It's wrong for a lot of reasons aside from just increased fraud. I think there's to your point, there's a important consideration of privacy. Like, I don't want my information to be out there publicly. I think everyone on this panel would have strong security controls regardless of whether or not they had to, just because of sort of the moral reasons for it. But I actually don't think it causes fraud as much as the public media would make it out to.
Okay, interesting. So you think it's sort of overstated, really? And Natalie, would that also apply to new types of data, for example? So suddenly, if we had a fingerprint database, would it concern you if that got into the public, or is it more that the legacy breaches have sort of been done around the sort of simpler types of data, or how do you think about that?
Stuff has been breached at different points in time. Like, I don't think that, and for the record, fingerprints in particular, like, I don't know specifically if that one has happened yet, but it's inevitable it will. And so, it's just get used to the idea of fingerprints being breached and design your system such that it'll work if it will. Because it's a one-way thing, it's going to get breached. The US government got breached. Every US employee, including like all active military, was breached a few years ago. I don't know if they collect fingerprints, but that information will all be out there. And so, design your system in such a way that it'll work regardless of whether or not that stuff is breached.
Natalie, Adrian, can I just ask Natalie,
please,
just in the spirit of like keeping the conversation going?
And guys, feel free to pitch in general. That goes.
Yeah, I find your statement about breaches don't matter somewhat concerning, and I hear your rationale behind it.
Breaches don't matter, I think, with respect to increasing fraud. Obviously, they do matter, and they matter for the moral.
Natalie, we've heard you. Let Kerry reply.
No.
Let's not have the quote be Naftali says breaches don't matter.
No, I'm not going to print a statement. Don't worry.
We won't quote you on that, okay? Thank you so much. No, look, I think it's great. It's good to stress test these things, right? So,
and I don't want that to be a headline. They matter. I hear that. I think it's more of the correlation between breaches and fraud. And the only reason why I challenge that a little bit is, having two kids in school and, looking at what has happened with online education and the lack of knowledge and intelligence around what to do as kids are doing more and more online, whether it's video or it's sharing their personal information, et cetera. And knowing that child identity theft is like one of the hottest areas that's growing right now, someone doesn't tap into Yale because they're looking at, trying to get into somebody's, meal cart. I mean, they're tapping into it because they're trying to get data that effectively they can create an ID that can substantiate for a period of time until that person goes and gets a credit check. And so I do think they're correlated a bit, maybe not as much as they used to be, but I think we have to be cautious that one breach in an area that may not seem to matter actually may have bigger implications.
Yeah, so I would say to that, so my evidence that breaches don't increase fraud at this point is, the fraud has increased massively over the last year. We saw it, you mentioned it yourself. That wasn't due to a breach, that was due to the CARES Act and all the money that was out there. Arguably the biggest breach that ever happened, the Equifax breach a couple of years ago. You look at the subsequent year, you did not see fraud increase to the same extent based on the Equifax breach, the same way that the media let it out to be. Your other point about the child identity theft, so at Centrelink, our primary product is synthetic fraud. And in some of those cases, in many of those cases, people are using the SSNs that belong to children. One of the interesting things is you would think that you would need to get a database of children's IDs that have been breached or something like that. It's actually not the case. Social security numbers are issued in a particular structure. They're 9 digits long, so it's actually very easy to make up a SSN. You literally just pick a 9-digit number. And it's actually public which SSNs were issued at what point. And so, for example, if you wanted to go and pick if you needed an SSN that was issued 15 years ago in Arizona, for example, it's public which ones those are. And so you don't know who that actually belongs to, but you don't need a data breach to do that. Literally, you can go online and say, I needed a Arizona, go look up the SSA, and even publishes this themselves. And you can say, okay, well, here's an SSN that the SSA issued in 2006 or whatever in Arizona, and go pick that. No data breach required for that.
Yeah,
I would add, I'm not sure which side of this argument I fall on exactly, but I do think the baseline assumption for everyone, individuals and financial institutions, should be that your data has been out there for a long time. If it wasn't out there before Equifax breach, it's out there now. And that having these kind of if you can pull data from multiple places, you are going to reduce the chance that any single, if fingerprints get breached, you'll at least have some redundant kind of backups. And I think that's a really critical piece to building a future-proofed sort of system today. You have to have multiple sources of data. You cannot rely on whatever is today the kind of silver bullet of identity, because it won't be tomorrow.
Yeah, absolutely. Makes a lot of sense. Good. So just to sort of move on, I think Laura, you sort of picked up on the experience thing. And in the interest of talking about some solutions, do you want to talk about some of the sort of leading edge stuff that you're seeing there in terms of data and tag, maybe also drawing from some of your sort of technology clients who may be more advanced?
Yeah, I think the themes we've been talking about still hold, which is that if you are able to pull multiple data sources, do that real time, which I like, again, some of the stuff feels very table stakes for probably us all here in the audience, but is not table stakes for the legacy financial services industry. If you can do things in real time versus batch, if you can use multiple data sources, so you're not just relying on someone's address that they lived at 3 years ago that's from a credit report, you're going to give them a much better customer experience. I do think some of the scaled fintech companies that we work with have some of the best kind of experiences, because they know that they can constantly sort of be scouring the market for new data sources, or rely on partners like us to be saying, hey, Centrelink is going to help you fight synthetic fraud, like you got to use them. And it just makes it easy for them to pop that in and see what sort of gain they have, or fraud mitigation they come out with almost instantly. And so if you can constantly iterate on that tech stack, data stack, and ultimately what becomes a customer experience, you're going to have just a much better one. The banks are catching up, I would say, some of them at the very least, and some of that is being driven by, again, this kind of cultural phenomenon. I think GameStop was a great example. We saw GameStop actually let one of our clients just kind of soar because they had a better onboarding experience than some of the other places that struggled with that. And so if something like that, I mean, as kind of silly as it is, drives sort of, better experiences, better innovation, I think we're going to just see more and more of that.
Absolutely. And maybe if someone wants to talk to, I also work in the financial services sector, and of course, fintechs are sort of doing racy things, but the reality is a lot of these organizations have legacy technology stacks, as you allude to, right? And it can also be tough to bring new solutions on board, right? Which may, on the face of it, perform sort of extremely well. The institutions may want to use those, but in terms of just making sure that sort of test, it's robust, it's stable, that's good with regulators, internal stakeholders, etc., can be tough. Maybe, Gabrielle, is that one that you could take and sort of talk to, if I'm sort of an organization which isn't at the head of the curve, how do I actually think about, maybe embracing, testing some of this new technology, recognizing I've got this legacy stack, which is, potentially archaic?
I think that we're definitely starting to see a shift with larger legacy financial institutions. Something that's been really interesting to me over the last 18 months is that there's been a movement towards more use of the cloud, which is something that 18 months ago was really not talked about by large banks. Almost every conversation I have with a bank today is around APIs, digital first. There is definitely a movement towards that, and I think that they see that this is the future, and this is where things need to go. I think the challenge, just to bring it back to the regulatory piece, is that these large financial institutions have been the ones that have been under the most regulatory scrutiny. They are the ones that have been hit with the largest fines, and it isn't the small up and coming fintechs. While they obviously have regulatory issues as well, but it hasn't been of the same magnitude. And so there is a hesitation at larger legacy financial institutions to lean into some of these things, and we are starting to see a much greater shift and a willingness to start to test and try out new solutions. Fortunately, at least here in the U.S., there has been support from regulators to do that. A real emphasis on bringing more innovation into institutions to enable some of these things, but they are still behind the new players that are coming in.
Yeah, it's interesting. Any other views on this sort of the role for the regulator and government in some of these initiatives? I think you've probably seen. The US eventually is going to have a beneficial ownership database, right? Which, I think it's interesting because the US leads often in enforcement. I think they've certainly been behind the curve in terms of beneficial ownership. And, that will come into play and hopefully be helpful. I say hopefully be helpful. Does anyone else want to talk to the role of sort of government and regulation here? Because I think it's great that we sort of hear, this top of the house voicing of innovation. I think that's genuine. Sometimes, that may not necessarily manifest on the front line when you look at the sort of day-to-day regulators. What else is the panel seeing in this respect in terms of regulatory actions that are helpful?
Yeah, I can talk to that a little bit. So I think we should remember that the government regulation is sort of like a two-edged sword. So on one side, some of the things that they can do, I'm personally very bullish on the beneficial ownership rule. I think that will be a big help. But there's all those things the government can do that push us in the opposite direction. I'll give an example of both, actually. So in our space, one of our primary products, as I mentioned, is we detect synthetic fraud. So we figure out people that don't exist. A couple of years ago, the SSA created a new program called ECBSV, which stands for Electronic Consent-Based SSN Verification, where for the first time ever, you could actually go to the SSA directly with a name, date of birth, and SSN, and ask them if they issued that particular SSN to that actual person. And actually, Centrelink was the very first company in history to go live with this program. And it's been a nice help because you can actually check, hey, does this SSN belong to this person? That said, there's a bunch of big challenges with it. So it's by far not the panacea that we kind of hoped that it would be. I think, Adrian, you mentioned legacy systems at some point. Let me tell you, working with the Social Security Administration, literally on mainframes, like that is legacy. Like I thought people were kidding. I thought that was like I thought that was just like a term that people threw around and no one knew what it meant. They literally have mainframes. I kid you not. So it's not perfect, but it's definitely an example of government kind of pushing everyone in the right direction. But I'd say there's other things that that government has done in terms of regulations that actually sort of surprisingly end up with kind of the effects that they didn't intend. One really interesting one that we're following closely at Centrelink is a particular kind of fraud called credit washing, which is actually kind of directly an offshoot of certain government regulations. It's really interesting. So in the United States, we have a concept of consumer reporting agencies, CRAs, which you can think of as like the three big credit bureaus. And the bureaus by law, by the Fair Credit Reporting Act, FCRA, are required to keep accurate information on consumers, which again makes a lot of sense. And as part of doing that, if there's inaccurate information about you and you discover that, you can go to the credit bureau and say, hey, this information about me is inaccurate, and supply evidence. And the bureau by law is required to scrub it off your file. So, if you actually did make the payment and they said that you didn't or whatever, you can actually go and scrub that at the bureau. All this makes sense as a consumer protection. One of the interesting things is that's actually opened the door for fraudsters to lie about this. And so one very interesting thing is actually if you talk to a financial institution about claims of identity theft, not applications, the consumers that are claiming ID theft are actually a minority relative to fraudsters who are claiming it despite not actually being the victims of identity theft. And so it's really interesting that this sort of consumer protection, which makes a lot of sense, which I support personally, has actually led to opening up the door to a new kind of fraud. So yeah, I think regulations can do kind of two different things, and in some cases be positive, but there's also, you got to watch out for like what the implications of them are.
Well, no, I think that's right. I mean, that's really interesting, sort of unintended consequences. So thanks for that, Naftali. I just wanted to change gear again. I think we've got 7 minutes left, panel. So, just wanted to think about the future, I guess, right? And obviously things are moving at breakneck speed around, digital and analytics, and Elon Musk would tell us that we're already beyond the precipice, so to speak. But we'd love to hear from the panel. What does the future look like over the next sort of 2, 3 to 5 years? What will the new solutions enable in terms of client experience? What can we expect to see? I don't know, Charlie, if you want to take a first stab at that one, and then we'll have the panel pitch in.
Around around the kind of underlying services, or is the question, or?
Yeah, absolutely, and maybe look, I'll welcome input from the group here as well. So Carrie, feel free to pitch in as well. But yeah, just if I could think of a world where I can seamlessly authenticate anyone sort of real time, no matter where they are, what sort of possibilities do you think that would enable for consumers or for businesses? Any views from you, Charlie, or the panel in general?
I'll jump in. I think I think we saw this like in the, God, it feels like yesterday, but it's a million years ago. Early 2010s, I suppose, sort of this unbundling of financial services. And then we saw the rebundling. I think we're now almost seeing another kind of version of unbundling, right? Where we have credit cards for every possible vertical, lending for every possible vertical, embedded finance everywhere, right? Your yoga studio is like on Mindbody, which is a financial services company now. So I think we're sort of seeing this again as kind of unbundling. But I think this time it's going to be more platform based, so sort of more unified in certain aspects. And I think that the identity, if you can solve the identity piece, identity and fraud, you actually really allow this stuff to flourish. And we're going to see new business models, new types of financial services everywhere. If we don't do it right, we still might see that stuff and it's going to go horribly wrong. But I think we have a much better shot now.
Yeah, I mean, that's really interesting because it's a real, there's so much activity in this space now around the fintech piece. There's massive investment. It can be tough where to go. So I think it's really interesting in terms of this platform play that you see as a potential, sort of aggregation mechanism. That's really interesting. Any other thoughts
Adrian,
on the future?
Yeah, I'll build on that because I very much believe what Laura said. I foresee a world where the convergence of payments and identity, it becomes one, and it's really about access and what you can access and when you can access it. And the reason why I share this, just having come from this payment space over the last 25 years, have thought a lot about what does a payment actually do? It gives you access to something that you want in your life or something that you may want to do. I was talking to a lawyer the other day about data privacy, and he was telling me he was working on this application of mapping the skeleton of individuals, because each of them are very unique. And with the whole intention of, as you walk, you get access to what you need to, and you pay for what you're trying to do as you just go along your day. And I do think in this world where you're looking at usage-based business models, whether it's insurance or whether it's in, loan kind of real-time loan payments, I do think that there's going to be a convergence, and it's going to be almost living in a world that we thought would happen 10, 20 years from now is going to happen in the next 5.
Yeah, I love that vision. So I just walk down the street, I pick up a paper, pick up a coffee, use my iPad, and I'm just sort of build seamlessly as I go throughout my day.
Next generation of Uber, right?
Yeah, fantastic. Any other comments, Laura? Were you going to say something there on that?
I'll just
Okay,
add.
disagreeing.
Yeah,
fire away.
I was just going to add two quick things. One that came up at the very end of the last panel, and I think it's interesting and something that we're going to be talking about a lot more, is that how identity plays into financial inclusion. And the better that we get at identity, the more people we are going to see get access to finance and are going to be more a part of the market. So I think that's a really, really exciting and impactful change that we'll be seeing coming over the next few years. And then another thing that I just want to touch upon is that as we move towards a desire for more real-time payments, I think that the advancements in technology and what we can do with data is going to enable that. And one of the things that we work on at Sigma is the collection, normalization, and scoring of disparate data sources across structured and unstructured data. Now, that's not used, we're not seeing our clients using it today for onboarding purposes, but I do think that we can move to trends where if you can leverage all of these data points as a single input, along with a score to help you with onboarding, I think that's something we're going to be talking about a lot more in the next 5 years.
Fantastic. So yeah, I love this idea. I mean, inclusion is just a massive issue at the moment. So that's terrific, and this could be a real enabler. Just want to give the last opportunity to any of the other panelists. We're coming up to time now. Any final comments, Charlie, from yourself on what you've heard this afternoon?
I guess to kind of summarize, I was at a World Bank remittances conference like 2 years ago, and I guess one comment there was, rather than trying to reform the big banks, the answer was just kind of to entirely destroy them and kind of go around them and rebuild everything from scratch. And that applies not only to the banks, but also to the underlying infrastructure in terms of like FedWire or Experian, Equifax. And I think with things like NFTs, right? I think in terms of being able to pay artists and creators in real time, I think what we've seen is in the space of kind of 10 years, like the creation of $2 trillion of market cap of fintechs and the wholesale restructuring of the entire system. I think that's been a really exciting thing to be part of. And I think, therefore, this kind of trend will only accelerate. And therefore, I think the kind of systems we had in place 10 years ago will be unrecognizable in 5.
Fantastic. Look, we'll leave it there. I think a very good close from Charlie, just in terms of the sheer sort of pace of change that we've seen, and obviously more to come, sort of impacting multiple sort of areas of our lives, hopefully for the benefit, but also safeguarding against some of these evolving risks and so forth that we face. So I will just thank you very much, Nate. I'm now going to bring it to a close, hopefully on time. So hopefully that's helpful. And I would just thank you all for a superb and very interesting discussion.